Have you been to a mall recently? Probably not. But if you have, you've probably looked around at all the stores that were closed, at nobody shopping, at the music playing and the lights on, and thought to yourself, how in the world is this still here? Who's paying for all this? The answer is, of course, the debt market, or CMBS, Commercial Mortgage Backed Securities. And although it may not be the next big thing you hear about in the news that's causing problems on Wall Street, there is a massive problem in commercial mortgage backed securities that's been sitting beneath the surface for the better part of a decade. And one of the people who's been warning about this has been none other than the Economic Ninja. This is part two of my interview with the Economic Ninja, and today we are talking all about CMBS. Tell me about CMBS. Tell me your thoughts on that. Why?
Yeah. So there's an open whistleblower case right now, and it's been going on for years actually on the commercial mortgage backed security market. And I want people to realize, so first off, mortgage backed securities are very interesting and very fake, and there's a lot of derivatives tied to them. And if you want to go back into history, and it's very easy to go watch, and it's an adult movie, so only adults should be watching it, but the movie The Big Short, it's a very interesting thing. I used to do a class where I would take students and I would put them in a room and we would watch The Big Short. And because it was amazing, because it has timestamps in the video, in the movie, right? And I would stop at like 10 different locations in the video. And back in 2018, we would Google the current stats of wherever the market was, wherever the debt levels were. And I could show a class, and in 2018, everything was worse today than it was back then, right? Well, commercial mortgage-backed securities are actually worse in the fact that so before there's a whistleblower case, before COVID even came out, that the books were being cooked, right? That projects were overstated, like they were finished, complete, and rented when they're still being, built. We've seen things like where people have falsified the amounts of rent, things like that. So it's identical to 2008 or the 2005 MBS problem, but here's where it's worse. We have never in the last 100 years had a shutdown of our economy, and the technology to be able to send employees away from their work location and say, you don't have to work there, you can work at home. And all these CFOs just got super pumped, and they said, oh my gosh, I don't have to pay for the electricity, the water cooler, the rent, the air conditioning. Yes, we're blowing margins out. And since COVID, you saw a lot of that showing up in quarterly earnings and annual earnings from companies, where they were just crushing it, and they were actually able to get more work out of people because it was measured work, right? So you saw a totally different dynamic come, and that is not going away. So you have commercial buildings around the nation right now that are vacant and empty, and even BlackRock lost one of their flagship premier properties in Manhattan a couple months ago, and I want people to realize this, Blackstone had to give it back to the bank. Okay. Whoa. What do you mean? Blackstone doesn't own it cash, but they're owning everything. They're buying everything. Or BlackRock. I mean, they're synonymous with each other. My point being is that the big ones are going to fall, and this commercial mortgage backed crunch is going to bleed in to the mortgage backed securities, because we are seeing so much damage that's going to happen in pension funds, hedge funds. And if one catches fire, which CMBS is already on fire, the fire is going to spread to others because people are going to be afraid to just invest in the entire sector.
So, just for a little clarification to folks at home, CMBS, Commercial Mortgage Backed Securities, that could be anything from retail locations like shopping malls. We have way too many of those here in the States. They could be office space. Now, with work from home being a thing, we have way too many of that in the US. And it could also be multifamily residential real estate. Well, we just talked about how residential real estate was in for a reckoning also. So basically, we have this three-pronged issue in commercial mortgage-backed securities right now, where these properties are not going to be worth anywhere near the amount of money that's owed on them.
Yeah. Oh, another thing about CMBS is they are not fully amortized loans. So if your residential, so what happens is you don't have to make the full payment on it. And if your building is half full, to keep the cash flow going and your margins, you don't have to pay the full amortized amount. So it is literally exactly like NEGAM loans, negative amortization loans from 2004 to 2005. And I want to remind people, the reason why those came out was because everybody was diving into adjustable rate mortgages, because 30-year fixed or 15-year fixed got too expensive as the Fed started raising rates back in 2003. They jumped into ARMs, and then those got too expensive. And then they jumped into NEGAMs. And I've been calling this that we're going to have two scenarios. Either NEGAM residential loans are coming back, and they're going to probably come back within the next 90 days. You're going to start seeing these advertised if nothing changes and the 10-year continues upward. or you're going to see the invention of the 40-year mortgage being literally replacing the 30-year. So it'll be a government conforming 40-year mortgage, which would bring interest rates down to what they are now for a 30-year. That would be tragic, because that would mean we'd have to start buying up real estate like crazy.
Yeah, I've read a lot about, going back on the CMBS issue, about how the income has been overinflated, overstated, and that whistleblower case. I cannot remember the name of the individual that filed it,
Yeah.
but they went back to University of Texas, did a study based on his case, and they found hundreds and hundreds of cases where the income statements in these CMBSs had been overstated. And the way they were overstated is there would be a clerical error in the address. If it was 101 Main Street, they would make it 110 Main Street. Or, it'd be 112 Fifth Street and they'd make it 112th Street. And then they would make an error in the income statement for the property. The problem was, out of hundreds of these errors, every single one of the errors made the income statement higher for the property. There was not a single case where the income statement at this commercial property was accidentally lowered. Hundreds of cases where fat fingers magically made the incomes go up.
And when you say magically, I want people to understand there's nobody that's going to be going to jail for these things. The way they build these prepackaged, financial products, it is very hard to pin one person with blame or a few people with blame. Okay. Another thing too, everybody was like sort of lackadaisical on the Evergrande situation. I want you to know that I can guarantee that 80% of the pensions out there have Evergrande and other Chinese property developer bonds in their pensions. And what's funny is, yeah, they're failing right now. They've already stopped paying on US bonds, overseas bonds, and your pension's taking a hit. But where you don't see it is because it hasn't taken enough of a hit. It's just a certain percentage. But what this is a catalyst. They just lit the wick. And now the wick is getting fatter and fatter. You're getting closer to that explosive point. And as you noticed, Evergrande came down. Then we saw multiple other Chinese property developers go down. Well, here's the deal. As they stop paying those overseas bonds, you're going to start seeing the pressure in Florida and in New York and California, because there are companies that hold those bonds. It's only a matter of time.
Now, when you say time, the one interesting thing is that, these CMBSs, they tend to operate in 5-year cycles, 5-year increments. And a lot of them most likely took advantage of the historical low interest rates during the pandemic.
Yes.
So
Yep.
even if the CMBS bubble doesn't go this year, next year, the year after, right? We could go through this whole real estate downturn and think we're out of it. And then in 2025,
Yeah.
this maturity wall hits as all of these loans that were taken out in 2020 hit. Well, now interest rates are much higher. They can't just refinance.
So let me talk about that. So there is an end game, right? So let's just say everything worked out perfect, and Evergrande and these large companies refied at the lowest rates possible. Well, the problem is the lowest rates possible actually happened after Evergrande collapsed. Okay, so that's the problem. So for sure, those Chinese companies are out. But if you think about it, most companies don't think like that. They don't sit there. Maybe they'll do quarterly if they're really on it reviews of their debt servicing, right? And they'll sit there and go, "Hey, we can refi right now," if they're on it. A lot of these companies are so prideful, so big. There's so many moving parts. It's so hard to get enough people to vote to make things happen that they're usually a biannual or an annual review process of debt servicing.
Ninja, I really appreciate you taking the time to talk to us today. Thank you very much for sharing your insight. And any parting words for our viewers?
My only parting word is I'm so stoked to watch you explode. I mean, it's been so much fun watching your channel. We've got to hang out a few times now at our meetups, and we've had so much fun, you and I, and become friends. And it's so cool to watch you just blow up. And that's honestly, that's just hard work. And so congratulations to Jack. But for everybody watching that wants to do something like Jack, even if it's not social media, it's literally just showing up every day. Whether you feel like it or not, you show up and you try. And after a while, what happens is success just flows right behind you.
Outstanding. And I really appreciate all the help, all the pointers you've given me, including me in your events. It has been a wild ride, and I hope to keep it up.
Heck yeah, man. I'm going to be seeing you soon.
All right. I'm going to let you do the send off, Ninja. Go ahead. Take us
All right,
away.
guys. Thank you so much for having me on. With that being said, the Economic Ninja is out.